Hello and welcome to Candlestick Charts. In this video, we will discuss the detailed candlestick analysis report for July 16th, 2025. So let's get started. Let's quickly look at the candlestick structure on Nifty before moving on to other indices. Today's candle is rejected near the 10 EMA exponential moving averages and 20 EMA, which signifies that there is some resistance at higher levels. They have formed candles that are indicative of intraday range contraction. They have closes below their recent short-term EMAs, which reflects a short-term bearish bias. Notably, none of the markets are in overbought or oversold territory. This suggests a trendless or range-bound environment. The wick suggests indecision and lingering selling pressure toward the close. In U.S. markets, the indecision and reversal possibilities represented by candlestick patterns such as doji and hammer-like candles suggest that the market may pause or reverse if macro drivers change. On the other hand, the bullish reversal signals like double bottom on Indian indices point to accumulation at lower levels, hinting that a base is being set up for an upward move. For the Dow Jones, the recent low of 43,600 serves as crucial support. Conversely, downside risks persist. Any break below support levels coupled with confirmation of bearish MACD crossovers may lead to deeper corrections, especially if negative earnings surprises or macro shocks occur. While long-term momentum remains positive, as reflected by prices above key moving averages, short-term candlestick patterns and technical indicators such as MACD and RSI point to a range-bound action with downside risk. Sector rotation is apparent, but no dominant breakout trend is present. Now let's see the candlestick structure on the Nikkei 225 and the Hang Seng. If you find this analysis helpful, please consider leaving a comment, liking the video, and subscribing to our channel for more insights. Thank you for watching. Both indices printed candles above their 50-day and 200-day EMAs, with the Nikkei also breaking above its 10 and 20-day EMAs. This suggests that despite some near-term caution, there's a persistence of an underlying bullish structure. Despite the set's overall rally, this is likely due to the sector already rallying in the previous sessions and some profit-taking by traders. Looking at the candlestick patterns, no abrupt sector-specific breakouts or breakdowns were noted in today's candle-based readings. The market sentiment can be best described as neutral, with a bearish undertone in the short term for major indices US and India. Medium and long-term uptrends remain intact as markets hold above their 50 and 200-day EMAs. The tech and FMCG sectors showed good momentum, contributing to the positive sentiment. However, it's important to note that the market breadth is predominantly positive, indicating underlying strength and support for the index. This suggests that although the market has the potential to go up, it is facing some hurdles. This could suggest a possible bullish reversal. It's a classic technical signal that indicates strength after persistent declines. Now let's discuss the MACD. The MACD for the Sensex, Dow, and S&P 500 is currently below their respective signal lines, generating a bearish crossover. This adds to the cautionary sentiment for the short-term moves. However, the Hang Seng and Nikkei 225 MACD are either at their signal line or above it, indicating a more favorable short-term outlook. It's not completely breaking out. The overall structure confirms that the market is still consolidating at the top. The body of the candle is nestled just below immediate resistances, and the wicks indicate some indecision. There is still some selling pressure toward the close, though not as intense as seen in previous sessions. Now let us take a look at the candlestick structure on the Dow Jones and the S&P 500. Next, let's examine the double bottom pattern. We observe a double bottom in the Indian market, particularly in Nifty stocks. Moving on to the RSI levels across all indices remain neutral to moderately bullish. Now let's analyze the candlestick patterns. So now let's look at the key support and resistance levels. Looking at the supports and resistance for the Sensex, the 50 EMA at 81,841 and the 200 EMA at 79,301 are important levels to watch. Now, let's move on to the financials. In the Indian market, financials saw mild profit booking today. In the US and European markets, bank stocks are in focus amid ongoing earnings and macro headline risk. Our technical outlook suggests that sustained closes above short term. EMAs combined with bullish reversal patterns like the ones observed today could reignite buying interest. To sum up, today's session was technically complex for global equity markets. Continued monitoring of reversal signals. Support levels and emerging candlestick patterns as markets await clarity from earnings and macro data releases.